got asked a lot was, if I trade in Forex, what type of tax do I pay? So we're still on the small business series and we're talking about small business corporations. And as you know, these are the tax rates for small business corporations. They range from 0% all the way to 28%, and those percentages are applied on profit. Again, profit is income less expenditure. And it's applied on the difference. So not just pure profit, but the amount less profit and then the applicable percentage. What type of tax do you pay if you are trading in Forex or if you have rental property? This is termed as investment income. So let's just take a look at what investment income means in terms of the Act, Section 12E. The first and third will be most applicable for most people. So the first one is any income in the form of dividends, foreign dividends, royalties, rental derived in respect of movable property, annuities, or income of a similar nature. The second one is any interest as contemplated in Section 24J. And then the third one is any proceeds derived from investment or trading in financial instruments, including futures, options, and other derivatives. So Forex is a derivative, and you usually trade in derivatives of foreign currencies, and so it would be applicable in this case. Marketable securities or immovable property. Now let's go through to an example that SARS gives us. A closed corporation conducts two trades, namely the rental of houses owned by the closed corporation on a long-term basis and the provision of short-term service rental accommodation to guests in two guest houses. The period of the rental agreements for the houses varies in duration depending on the tenant's requirements, but are generally longer than 3 months. The guest house offers accommodation on a bed and breakfast basis. The duration of a guest stay varies, but is generally between a few days to 2 weeks. Guests can request dinner at an additional cost. Gross income consisted of rental from the houses of 12 million, income from bed and breakfast accommodation at the guest house of 4 million, and income from the supply of dinner meals and 400,000. The result is that the gross income for the period is going to be 16,400,000, and it has not exceeded the 20 million threshold that applies to small businesses. And so rental income from the houses, which are long-term, you're usually looking at over a month, 3 months, you're looking at that being termed as long-term. However, for instance, if you had an Airbnb or a short-term rental, you could actually still be eligible for SBC tax rates because that is not termed as investment income as per the Act. Did it exceed the 20% threshold? And essentially, just do a small calculation, the amount that would be termed investment income over the total gross receipts times 100 gives you the percentage. And in this case, it is 12 million over 16,400,000 times 100, and that gives you 73.17%. In this case, the 20% limitation has been exceeded, and therefore, unfortunately, small business corporations' tax rates will not be applicable.